Well, hello and welcome to Spotee, streaming to you live from Melbourne town here at the Ticker News studio in a glamorous Richmond, and hoping you all had a restful and peaceful Easter period. But now that the holidays are over, it's time for some of us, or at least those still not on leave, to shine the spotlight on shares and answer your questions live on air. So how do you do that? Well, it's easy. Dexter's nice, fresh and relaxed, and we'll take your text message 0480 079 089, or you can email us question@spotee.com.au. You will see those details appear at the bottom of the screen as you're currently seeing now. But of course, as I like to remind everyone, if you put it into your smartphone, then it makes it much easier to, you have that scratch that needs itching, or itching that needs scratched. When you have your question, yes, it was a big weekend for me. Hosted a whole lot of family members at Casa d'Amato, and I assure you I am still recovering. But let's bring in today's chief spotters, starting with the global CEO of a massive research house. It's our great man, Kunal Sawhney from Kalkine. G'day, Kunal. How are you going?
Elliot, thank you very much for inviting me. And yes, I hope you had a very good long weekend, and wishing the same to all our viewers as well, that all of them had a very good long weekend. And as you can see behind me, the city is still empty. Sydney CBD is still empty. So a lot of people are still enjoying the long weekend, I should say.
No, very true. And maybe they're still partying at the Hunter Valley where you came from, of course, and that's why you got that big smile on your face. But let's get to business, Kunal, because, of course, markets don't sleep except for public holidays, so they're open today. Why don't you tell us a little bit about your background and then, more importantly, the great business that you've built there at Kalkine and your broad reach, because, of course, you do extend beyond the ASX.
That's correct. So Elio, Kalkine was started 8 years back by myself. Today, we are all over the world. By all over the world, I mean we have 5 countries that we are currently servicing. So we are in Australia, we are in New Zealand, we are in UK, and we are in Canada. And this month we have launched in the US. So our US launch has begun. And the next step for us is to be launching our services in Europe as well. And we plan to keep on going and keep on covering the financial markets all over the world. You can visit us at kalkine.com. And if you want to visit the Australian site, it's kalkine.com.au.
Now, interesting, I noticed on kalkine.com.au, a little bit of change since I'd last visited. You now have a Kalkine Light available. Do you want to tell the viewers about that?
Yeah, absolutely, Elio. So Kalkine Light is designed for investors who are just beginning in the financial markets, and they don't want to spend too many dollars on research. So hence we launched something for about $20 a month. They can join us and start getting the reports. And we have had a tremendous response to that. And a lot of our members have come via Facebook, come via Google and joining us. So that has been very good for us, and we are able to service these clients in the best possible fashion, and that's the strong point of our business.
So kalkine.com.au, you'll notice that in the top right hand corner a little orange button that says special, and then you just follow the bouncing ball if you're interested to learn more about what it is that Kunal does and how he helps clients every single day. Well, next is little old me. It has been once top performing fund manager, known for his fundamental analysis, but I'm also good with a pencil and ruler too. So I'll be looking after the technical analysis side of today's discussion. And yes, I do now incorporate it within my own personal investing approach. So, and I've educated on it over the eons as well. So I enjoy doing that. Currently, as we go to air, Kunal, the market's having an incredibly strong run. The All Ordinaries up 0.94%, the XJO up 0.84%. So the Easter break hasn't halted the recent momentum. We've now well and truly cracked above the 7,000 for the All Ords. The XJO still has another 114 points to go. But let's discuss today's main market news, and I want to start with some M&A activity or corporate action activity. Cleanaway Waste Management. They've jumped in for the battle of the purchase of Suez R&R. Now, R&R is not rest and relaxation, it's recycle and recovery. That Australian business in particular for some $2.5 billion. Now, they were looking at a bid for the parent company Suez SA, but that is currently in takeover talks with Veolia Environment, another major global waste management firm. So the deal could scuttlebutt those, so they might not get their hands on the Australian business, because what happens with that major takeover of the parent business is really what's important there. However, they have struck an agreement where if the deal does fall through, that Suez Australia will sell 2 landfills and 5 transfer stations in Sydney to Cleanaway for a price of $501 million. Now, Kunal, waste management, obviously, I know we're moving to a greener future. We're trying to remove all the waste that's out there, but one man's trash is another man's treasure, and Cleanaway has obviously benefited from that. This continues their expansion. Do you have a view in regards to CWY, and what did you make of today's developments?
Sure. So Cleanaway Waste Management, the code is CWY on the ASX. I think they're doing pretty well today. They're up about 10% at the market open. And they are Australia's biggest waste management company. They announced that they have signed an agreement with Suez to buy the Australian business for about 2.52 billion, which generates about 1.42 billion in annual revenue. So very strong revenue that Suez has been posting. However, the hurdles for the deal remain is that the Paris based, so they are a French company, Suez, is involved in a takeover tussle with domestic rival Veolia. Market players need to be cautious here, because French waste and water management firm may terminate the acquisition by May 6th in case it reaches a deal in principle for a takeover of the firm by Veolia. So Veolia is also after them. Suez in February rejected a 11.3 billion euro takeover bid by Veolia, and since then the two companies are struggling to agree how to carve up Suez business and have clashed in the court over it as well. So there have been some legal hurdles as well. So overall, it's a very complex situation right now, but Cleanaway has obviously jumped in and looking for the Australian side of the business.
Yeah, well, that's, as Kunal mentioned, had a strong price reaction today. One that's gone the opposite way is Intertek Pivot, who once again has been forced to delay the recommencement of operations at Waggaman, its ammonia plant. Now, the company had previously advised that the plant would recommence operations in mid-March following a planned turnaround. However, that has now been delayed until mid-April as further repairs are carried out. Now, the delay is expected to reduce 2021 full-year earnings to the value of some $36 million. I hold IPL on the back of this. If it closes at this level, currently trading at $2.67, I will be stopped out. A little bit disappointing, unfortunately. It has gone up actually from when it initially announced the close of Waggaman way back when, but still nonetheless a disappointing reaction today. It'll be interesting to see how it goes in afternoon trade. It is off its lows though. Lows at $2.52 today, currently sitting at $2.68. But Kunal, I want your view in regards to a big announcement today in regards to the Reserve Bank, who will be meeting to discuss interest rates. Not that much is actually expected from the release at 2:30, but there's going to be a lot taken from the key messages. Key messages around one, interest rates. And now that everyone is looking at wages growth rather than inflation for guidance, how does this change? How does this evolve? The other thing everyone's going to be looking at is the bond buying program and the Aussie dollar, of course, which has since stabilised after it had that little bit of a spike a few weeks back. And of course, the rising house prices, as you would know up there in Sydney, and curbing those, particularly as the RBA will most likely be set to ask APRA to tighten lending conditions, reversing the decision it made in 2019 to loosen lending conditions. All seems a bit crazy to me, Kunal. Long story short, what do you expect from today's decision in regards to what will be, the likely takeaways of those key themes? And then let me throw in another element to that. How's it going to impact the banks? Because, of course, they've now got a solid outlook because the property market's booming and everyone's getting home loans. Could this possibly change their trajectory?
Okay, so let's talk about this. Elliot, despite the continuing recovery of the Australian economy, the RBA is widely anticipated to maintain its accommodative policy setting. And I think what that means is they will be keeping the interest rate at about 0.1%. And we are banking more on what RBA has repeatedly emphasized, that interest rates are most likely to remain at the current levels till it reaches its inflation and employment goals, which a lot of economists believe are not likely to be achieved before 2024. So there is a high chance that we will see this accommodative interest rate policy at least for the next 2 to 3 years. Also, I feel that the prevalence of record low interest rate is likely to further deliver a push to the housing prices. Already we are seeing record housing prices in Sydney, which are already breaking records, and sectors including consumer staples, healthcare, real estate, communication services, and utilities, which usually perform well in low interest rate environment, are likely to benefit from steady policy setting. So we will again see a lot of those dividend hunters going for companies like the utilities, healthcare, consumer staples, and obviously the banks, because banks are again coming back into the dividend space. So we will see again search for the banks, and that could lead to a spike in the prices of the banking stocks.
Yeah, I mean, not normally my game in regards to banks, Kunal. I prefer the smaller guys, but obviously they do have sector tailwinds, which would be good for the broader market, of course, contributing to that positive sentiment there. Well, it's time for us to answer your questions now, but first a reminder that all the information in today's show and us responding to your questions, our answers are only of a general nature. We can't take into account, as much as we want to, your personal circumstances, situations, or needs. Therefore, should you decide to act on any of this information, then you need to do so in light of your own personal circumstances. Past performance is no indicator of future performance, of course, and as you already know by now, that if you wish to discuss any of this content with anyone other than your significant other in life, then you need to do so with an advisor that's licensed to have that conversation with you. And a final reminder that guests who appear on this show, including myself, hold interest in stocks that we talk about. We try to remember to disclose that in our discussion, but in the cut and thrust of picking stocks, we sometimes do forget. So just a reminder that if you wish to get any clarification in that regard, by all means, feel free to contact us all directly. All right then, so let's get into the questions, Kunal. I want to talk about one of those stocks because, of course, there's a lot of themes pushing markets at the moment. But if we go back to say 2019, one of the themes, particularly in the food space, was anything linked to Tasmania was going to do incredibly well. One of those stocks that Williams brought to our attention today is Pure Foods Tasmania. The code is PFT. Now, just to give you a bit of background here, Kunal, not that we can take his circumstances into account, but I found it rather humorous what he wrote. He got in at 50, he got out 50 cents, he got out at $1.60, so one of the few trades he's ever nailed. Good for you, William. He even got his mum into the stock when they were at 70 cents. However, from being a champion's son, he's about to be kicked out the door because currently, as we go to air, the stock's down 3.9% to 73.5 cents. So he's got 3.5 cents before he gets disowned. There you go. There's our Mount Fuji pattern that I always like to talk about. Now, notwithstanding the technical sort of thing, he just wants an idea in regards to the business, thought on the long-term prospects for this business, particularly given the nature of what it does, its channels, and also it's been aggressive in making a number of acquisitions. So you take the fundamental side, Kunal, and then I'll look at the chart. So take it away, Maestro.
Okay, so PFT, Pure Foods Tasmania, they have successfully traded in the past from 50 cents to 160, as Elio you just mentioned. One of the rare times, obviously a lot of people did really well on the back of this stock when it reached 160. Pure Foods Tasmania, they have strengthened the footprint in plant-based foods, which is the future. future. Plant-based foods are the future. In US, there is a company called Beyond Meat, which is also doing very well on the back of plant-based foods as well. By far, there have been 2 acquisitions this financial year, which is a very good sign. Acquisition of the Cashew Creamery and the Lodz plant-based food demonstrates that Pure Foods' strategy to grow organically and via complementary acquisitions is proceeding well. Furthermore, the market opportunities are pretty decent. It should be noted that the global plant-based market is forecasted to reach about 3.9 billion Australian dollars by 2024. Let's talk about their operational and financial footing. The group is well funded with a decent cash position, making it well positioned for growth. The half year ending 31st of December 2020 saw a 51% increase in sales revenue on the prior corresponding period. PFT's e-commerce platform generated over 300% plus uplift in online sales. So if the company can achieve product diversification and increase its distribution, it can sure be an appealing long-term prospect. However, the pandemic-induced restrictions need to be looked at in a very serious fashion. So they have a lot of things going for them, but obviously the pandemic has done a few challenges for them. So we just need to be careful, but in the long term, they look like a decent one.
All right then, William, let's start with a long-term view on this one. If you pull that chart out, you'll notice in the space of 12 months, it's gone up from that 30 cents to $1.70, and it is actually, heading back to 30 cents, which it will come very close to if it breaks the 69 cent mark, in my view. That is, of course, unless they get bought out, and corporate activity in this space is something that is occurring, and there may be some that will take advantage of the fact that it has rolled up all these brands and put them all together. Now, I know it looks like that they've been consolidating, since February, but if you look closely, there've actually been a number of fake breakouts all along the way. Even recently, just having a look at the chart here, you had, 3, what they call 3 white soldiers, which is, okay, so I won't go into it in too much detail, but basically when you look at the sort of the bars, as it were, it opens at the low and then closes at the high. Basically, then we get this whack on Friday and it lost all that. Now, here's the thing. If we got an update today, then that would actually be a positive signal in regards to analysing, candlesticks. After you get 3, you get a whack and then it goes up. That's actually generally a positive sign. Today's action, though, doesn't do that. So on account of all those false moves, I really would want to see it break 89 cents before I committed any coin to this one. I don't hold it. And yeah, 69 cents would be the, thanks for having a good time, Mum, but it's possibly the opportunity we just have to get out right now. Kunal, I want to ask you about a stock that Teresa has asked about. It's a stock we've talked about on the program before. So normally I say, oh yeah, go look at the past episode because the commentary hasn't really changed. But she sounded a little bit concerned. So I did want to raise it to get your view in regards to the business. It's in regards to AGL, AGL Limited, of course, the code AGL, and wants to know basically in sum, when we come to the conclusion, the prospects for the business now that it looks like they're going to be splitting in two, because of course it has been a very tough run for share price and for shareholders. Is this going to turn around that story, Kunal?
Okay. So let's talk about AGL, one of the biggest energy providers in Australia. So they are looking at splitting into 2 companies, the new AGL and Primeco. And these 2 companies will allow AGL to pursue focused approach on emerging opportunities across the electricity generation and distribution business. The prospects are pretty good for the business segments given the burgeoning market opportunities. The new AGL would deliver electricity, gas, internet, and mobile services and focus on transitioning to a low carbon future. So new AGL would be Australia's largest multi-product energy retailer and would cater to more than 30% of Australian households. PrimeCo would be the focus on generating and supplying electricity to wholesale, industrial, and retail electricity users. PrimeCo has planned a major transition to clean energy solution and may observe a major change in its energy mix. PrimeCo would be the largest electricity generator in the country and would generate over 20% of the total electricity demand across the national electricity market, in short, the NEM. So from where we see it, the new AGL would have a lot of the aspects of going into internet and mobile services and so on, and PrimeCo would be generating the electricity. And also what we have seen is that a lot of the institutional investors are not currently convinced by the proposal. Hence, there is a lot of the downside risks, as we call that we have seen. So the challenge is there is not plenty of vertical integration between both the businesses. So hence that's going to be a huge challenge for PrimeCo because with AGL they had the distribution aspect as well. So currently it looks there are a few challenges there.
Yeah, once valued for its strength, but then as the banking sector proved, sometimes it can be a drag, but it'll be interesting. Look, Teresa, as I've mentioned, we have spoken about this before. I'll let you in on a little secret. I've been struggling to convince one of my clients that AGL has been bad news for quite a while, and always they came back to me saying it'll get better. We need power. They're not going to disappear, et cetera, et cetera. Well, the latest rendition is really the last chance saloon, being the splitting of the business. It's interesting when you look at it, right? I mean, because all the reasons that Kunal actually mentioned are correct, but then that's also a potential risk as well. But PrimeCo is very much focused on trying to build this renewable energy base that now is freed up of the whole litigious environment of the retail side, which, notwithstanding it's being the profitable side, is also the most competitive, the toughest to operate in, and now really puts them out there, free market, freewheeling to see how they go. It's almost like stripping out the infrastructure from Telstra and thinking that Telstra could then do it and say, well, we know what happened there. The bad news is it's come back. So look, the reality is the split, in my view, does create a flaw. Now, basically, if it breaks $9.38, I've got to be honest with you, it's definitely bets off the table. Now, I know you've already taken quite a bit of a hit in regards to that. So to be honest with you, it's not much more than what you've already done. But you know what? You could let it breathe. It could re-rate on this news. Okay. It will be interesting to see what comes through. They've been such a big whack already. It's a little bit tough. I wish I could be confident enough to suggest that, this could be a topping up perspective. It's really hard initially to say that. I would wait for some news from the business in regards to the split before necessarily getting too eager to drop any more coin in it, given the amount that it has fallen to date. If it can prove that it can execute this strategy, then maybe that'll give you the confidence to then top up, which, you may very well need to relative to the prices of when you get in. But it is a delicate situation you're managing now, and that $9.38 is a pretty key level. Looking at them today, $9.67 down another 0.5%. It looks like the market needs some convincing there. A bit of time before the bus pulls out.
Elio, I just want to add one positive here.
Yeah.
It's a long-term plan, but I just want to add one thing.
Yes.
Is currently the adoption of EVs or electric vehicles is quite low in Australia. In some of the countries, it's pretty heavy. So that could be a turning point, but that is going to take some time because some of the numbers that I have gone through is they say that if 10%, 20% of Australians start using EVs, it's going to put a huge pressure and demand on the electricity infrastructure. And that could be a huge positive for AGL. So what I'm trying to say is the change can happen for AGL and it can be a positive one, but I think that's going to take some time.
Yeah, and that's why, the guidance from the company will be key there. Another stock, Kunal, that Joseph has asked about, another long-suffering shareholder, but not in AGL this time, The code is MYX. So for those playing along at home who don't know that, it's Mayne Pharma. Just to reiterate Joseph's question, saying that basically last week the stock jumped as it's waiting for FDA approval on its contraceptive drug. And he believes that, by the way the share price has moved, it looks like that there could be some positive developments in and around that. And could this be the catalyst for a turnaround story? Before I ask you about the business, Kunal, just in regards to price, yes, you have been a long-suffering shareholder, Joseph, unfortunately. If you're interested, I actually bought into the stock on the 16th of March at 35 cents as a short-term trade. Now, I would have been wrong, so my stop was set at 32.5 cents, but fortunately it stayed above that. Now at 42.5 cents, it looks like I was right. So why did I get in at that time? Well, the price got above the 200-day moving average for the first time in like a year, and that average line had flattened out for the first time in a year. Prior to that, it had been going southeast. The RSI moved above 50, and a big hello to Gary Burton if you're watching. The MACD was growing and expanding, and it had been bollocked, really, and it had some good news on the horizon. So there was enough that tilted the risk to the positive side in my view, but it is a short-term trade. My stop has now been moved up to 40 cents, and it will trail this for as long as it goes up. I'm not stupid, because any bad result will smash this back to 35 cents. We know that. It's the nature of playing in biotechs and this sort of field. So you got to remember that when you're looking at a chart, even for a venerable business like an MYX. Currently looking now, the price is flat at 42.5 cents. Just need to watch and see where that goes on those shorter runs. You will be wanting to see some consolidation prior to saying that trend reversal has occurred. Otherwise, it could easily pull back, although we have seen a higher high, which is a positive, but anything can happen in the market, and we just got to trade to the way the price moves. But Kunal, Joseph opened up by saying it had been a tough stock for a long time for investors. Why don't you tell us a little bit about this business and what catalyst is really needed to support that price move? Because it was 20% actually rise on the Thursday. What's it going to need to support that and hopefully change its trajectory?
Okay, so let's talk about Mayne Pharma. So they are a specialty pharmaceutical company. Mayne Pharma, MYX is their code. They are an experienced player with a good global reach. So the positive is they have a good global reach. Results in 2020 were a mixed bag. For instance, while revenues were down, international sales grew with commencement of marketing of 4 products. What needs to be watched in MYX is their ability to prudently control spending, investment in substantial sustainable areas. Besides that, if the company can increase the capacity and capability of its global contract service platforms, it could be a good prospect from a long-term perspective. However, movements in the US dollar, the timing of the FDA approvals, competitor launches and withdrawals on key products need to be vigilantly looked at. And I think from memory, I read about their loss. I think they suffered a 181 million loss during the first half of 2021. So as I said, it's a mixed bag. There are positives and there are negatives, and obviously they have done the last 6 months or the first half of 2021 financial year has been very challenging period for Mayne Pharma, as the company, they had a few the losses that came through to an increasingly competitive generics market, tougher COVID-19 operating conditions, and a weakening US dollar. So they have a few challenges in front of them. But as Elio said, maybe in the short term they can do well, but they have a few challenges in front of them.
Yeah, that's right. That's why I'm still in only for that short-term view. Just remember, if you've got a question at spotee.com.au or text us 0480079089. And if you can't watch the show live, you can always send your questions in earlier before the show. We're happy to answer them in lieu of that. Go to the website spotee.com.au to see all past replays of the show as well. Remember, you can search for your company of interest by typing in that corner, in the top right-hand corner, and you'll see which episode it appears in, and it appears in order of what the company is listed as well. And yes, we are available on all the social media channels. Just follow me on Twitter or on LinkedIn and Facebook. Go to the Spotee sites. Happy to have you come aboard the journey. And yes, you can listen to us on podcasts as well. Kunal, the market's still currently holding its own. The XJO up 0.85%. The All Ordinaries 0.96%, or 95 actually at the moment. So we're holding up our end of the bargain, which is great. Let's talk about another stock. One of the hot sectors has been hydrogen. William has asked about a stock in particular. The code is GLV, which is Global Oil and Gas. And he's saying that he's noted for some time that a few of these specky oilers have gone on quite a run. He likes the chart. He's seen a big spike in volume, but he'd be interested in regards to knowing, what that fundamental outlook is for that business and whether there's a little bit more to the story. He has said, though, that the price has lagged a lot of what a lot of those other junior explorers have done. And he's just trying to scratch his head wondering why that might be the case.
Okay, so let's talk about GLV. Okay, talking about the trend, the stock is, consistently moving in a uptrend since the beginning of this year, delivered a 190% year-to-date return, and their 20-day average is acting as a good support level, and every dip has been bought near the 20-day average so far. Coming to the volume, there has been a considerable increase in the volume, which has supported this rally, which can also be seen through the rising OBV till mid-Feb. And although we would have preferred a rising OBV curve here to support the uptrend after mid-February, but the current scenario is still better than a falling OBV. If price continues to go up, what we can see is that the trend is, I think they have been as high as 4 cents. So that is something, the trend is helping them right now. Now, in terms of some fundamentals, I quickly want to mention this. They have received a sacred site clearance for tenement in the Georgina Basin in the Northern Territory, allowing for hydrogen and helium exploration to go ahead. Field activities and geochemical surveys have been planned around sacred sites, and while the work program is primarily focused on identifying active helium system, the company says that the geology indicates it should also look for rare earth gases of helium and hydrogen. Yeah. And so the stock has been to a high of 4 cents. From a big macro picture, I just want to say that a lot of car companies, besides working on electric vehicles, I think Toyota is the one which is also working on some hydrogen vehicles as well. Yes. So that could be a boon for the business as well. I think from what I read, in Victoria, they have launched about 80 vehicles, hydrogen-based vehicles in Victoria. So I think that could be a positive for GLV. So I think they have done well this year, and if things work out for them, they can do decently well.
All right, well, just quickly, will I own GLV? The first thing you'll notice, the pop and drop that, occurred in early Feb. Well, such patterns, really, they need time to wash through the system, and GLV has really gone by the playbook. In fact, price has held its own. And if you squint, you can see that the 200-day moving average line is just starting to rise as well. So as you correctly assert, it's hugged the 7-day average closely too, which is also a positive sign. And it's got a solid looking weekly chart. Change that to a weekly view, and it's pulling itself out of what was a pretty prolonged downtrend. The only downside here is that there's been a bit of selling pressure as the price gets back to a level not seen since 2019. That's going to be a natural resistance level. So where to from here? Well, obviously, anything really can happen, as it can with these small guys. Interesting to note, though, that Twiggy Forrest has come out and said that Australia needs to have a green hydrogen future, as Kunal has just vindicated as well. Enough said. Not surprising, though, that he also has an interest in a vehicle, which also has an interest in another vehicle, who is a co-partner in regards to GLV. Just thought I'd drop that in as well. You did mention one other stock, which has had an interesting day, unfortunately, today, and that was 88E, which is 88 Energy. Look, and the question also in regards to Paul, who's asked about it. Drilling results from their Peregrine project in Alaska have come out, and really the crux of it is they said operational issues prevented it from obtaining hydrocarbon cycles from basically two of its main prospective zones. So the share price has been savage today, just having a look here, down 67%. It's really difficult to manage these from a technical analysis perspective because they're boom and bust type stocks, right? Liquidity had ticked up, but they've just disappointed. That's the fact of investing life that you have to deal with, I'm afraid, Paul. Lesson one is if you weren't holding the stock before it had that spike, you just can't chase. You know, if you don't hold it, don't chase it. You got to wait for a period of consolidation, even if it's at higher levels than where it's at today. Lesson two is if you held it on the run up, then you got to take windfall profits. Okay, you got to take at least you got to you got to carry free risk carry trade, as they say, which is basically taking off what your initial investment was. You got to play with other people's money when you see these extraordinary rises. You can't be greedy. Okay, that's just it. And lesson three: if you're bought in early but you still believe in the business, that hasn't changed on the back of this result, perhaps. Then you know what? Don't sell. I know that's hard, but if you bought in for a belief and it's still intact, then you maintain the faith. But you got to really test that with some scrutiny. And hopefully there might even be a lesson in part two of what I mentioned about protecting yourself, because you could still top up and go in more if you wanted to, if you had protected your initial capital investment as well. It's a tough game, I know. Quickly, Kunal, Stephen has asked for a fundamental view on the short-term prospects in regards to ADAIRS. The code is ADH for those playing along at home. His assumption is that the current red-hot housing market will help them continue with their strong sales momentum. So what's your view in regards to ADH, Kunal?
Okay, let's talk about ADH. So they are a home furnishing and home decoration retail company. It is limited, code ADH. They have seen a decent share price growth so far in 2021 with a surge of over 12%, despite 43 greater Melbourne stores being closed for almost half this period in first half financial year 21 due to COVID-19 related restrictions. ADAIRS recorded a surge of about 35% in group sales. Australia's red hot property market is further expected to give a leg up to sales of home furnishing retailers like ADAIRS over the coming months. This is because resurgent housing cycle is likely to generate solid growth in building and renovation activity as the economy recovers from COVID-19. ADAIRS' continued investment in digital initiatives may also drive its business further, which is already harnessing the benefit of robust e-commerce growth via uptick in online sales. And I do want to mention this from what we can see right now, as due to COVID-19, companies like Nick Scali, companies like Harvey Norman have done really well. So it could be some very good positive time for ADAIRS as well. So these companies, consumer discretionary companies, especially in the furnishing and the home decoration sector, have been doing really well.
Okay then, well, it's time to see the light now. We're basically at the end of each episode. We ask our guests for two stocks of interest that we all listen attentively to, then toddle off and do our own research and see whether the company aligns with our own investment objectives and tolerance to risk. Now, I'm going to start off. Kunal will finish it off behind me. My two stocks, well, I want to start with a company called Image Resources. The code is IMA. Now, Craig, this is a special shout out to you because I know you asked about Astron a few times recently. If you want to play the zircon game, then here is one to consider. Image Resources is a relatively new producer of zircon mineral sands. It's done so for the last 2 years, and unlike Astron, located in the Wimmera here in Victoria. Image is based out of WA, and their projects are Boonanarring. Boonanarring is one of their projects. The other one is Atlas, which are both highly prospective too. Boonanarring North actually had some pleasing further scope studies just done recently, and Hyperion as well as Helene for Atlas will be coming in the not too distant future too. So they're profitable, they're growing profits, return on equity sits at 26%, the dividend yield is close to 10%, and they trade over $150,000 a day. Now, yes, the cycle is working in their favor, but I like the potential of further resource upside. So IMA is a stock to look at there. Another one, not for you, Craig, necessarily, but for everyone. And yeah, feel free to play an IMA if you want, folks. GNC, GrainCorp. I suppose I better talk about the chart, given that's my role here today. Look, we know what they do. They've dodged a bullet with regards to the recent floods, because now is actually when the seeds are sowed for grain, not 1 month ago. Thank heavens for that. They also recently announced that they will be improving port capacity and yields in order to generate more earnings return. So from a chart perspective, since the March lows, there's been a steady staircase rise. It's been a very stable textbook rise up. Now, if you look at that weekly chart especially, you'll see there's been not much to get all that excited about, just going about its business, doing the right thing. There is good money flow coming into this business as well, and all trend indicators are positive. And the positive news flow behind them further adds to that. So yes, it's true, it would have been better buying at $5, but if you put in a stop loss at $4.89, even if you wanted to give it a bit of breathing room, $4.59, you'll be fine. But really, this is a textbook chart line going in the right direction. So IMA and GNC for me. Kunal, what are your two stocks?
Okay, here we go. So the first one is Megaport. The code is MP1. They are engaged in the provision of internet and interconnection services. The company is at a comfortable financial position with a cash balance of 145 million as of 31st December 2020. As per ASX, the stock of MP1 is trading below its average 52 weeks levels of about $9.36. And also, we believe there is an expected upside in valuation, current trading levels. There is a decent increase in top line, rise in customers, growth in number of boats. Investors may put the stock under their radar. However, one needs to be cautious of the fact that the company is exposed to the risk of breach in information security that can cause damage to its brand reputation and may lead to clients' loss. Moreover, it operates in a sector where there is a possibility of business disruption and hence has to keep itself updated to the latest technological trends. So Megaport MP1 is the first one, and the second one is in the healthcare sector called Rezap Health. The code is RAP, ASX code is RAP. It is engaged in the development and commercialization of its Rezap technology for providing healthcare solutions for respiratory disease. As per a recent update, the company has secured a 1-year licensing agreement with AstraZeneca to license its cough counting technology for application in a program to support asthma patients. The company has secured TGA clearance for its wearable watch on 25th of March 2021 and is well positioned to sell the product in Australia. Considering the current trading levels, valuation, TGA clearance, licensing agreement with AstraZeneca, and the key risks associated with the business, RAP is an interesting stock to evaluate from an investment standpoint. So the two are MP1, Megaport, and the second one is Rezap, RAP.
And a brief update on Orbital Corporation, OEC, who I shone the light on last Wednesday. It's currently up over 25% since the close of that day. You're welcome. Well, that's all we have time for, folks. So on behalf of all of you, I want to thank Kunal Sawhney from Kalkine for his amazing contribution today and for his assistance in answering your questions. Thank you very much, Kunal.
Thank you, Elio. Have a very good one, and thank you very much for inviting me.
No, you're welcome. Remember, kalkine.com.au is the website, and they've just launched the Kalkine Light product. You'll see it in the bright orange button in the top right-hand corner. If you're interested, perhaps go and have a look yourself. Now, for tomorrow's show, the start of April means the quarterlies for March are over, and who better than our resident dust-filled petri dish, Tony Lacantro from Alto Capital, who will join me to run the rule over the latest quarterlies. So if you've got a question or you've got your preferred pre-revenue business that you want us to shine the light on, or even the ones making money, to be honest with you, we'll answer all questions you might have on stocks. Just send it to question@spotee.com.au or text us 0480 079 089. Always tough after a long weekend to get talent, but we have a few spaces in our regular schedule for some new talent to come on board. So if there's a favorite broker you like to use or an analyst that you follow, then let me know. But here's the thing. If they're popular commentators, chances are they've already said no. So I'm looking for brilliant new talent. That's your challenge, folks. Until tomorrow, I'm Elio D'Amato. You've been watching Spotee, and together we've been shining the spotlight on shares, and I've had enough of chocolate.
Stream Ticker News live on the Ticker app, on your social